Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
We get started. We're not in the same place. Mike and Jason are in Colorado. I'm at my post in New York. Same as last week. I don't think we need more than 5 minutes on the last three exhibits. On the world oil supply demand, really no change. I think we've been saying no change since the beginning of March. And I think the oil supply numbers here and the oil demand numbers are pretty good, pretty much in line with other people's forecasts. The price of oil is down in the 70s. I think it's going to stay down. I don't think this particular arrangement between the United States and Iran is going to run off the rails. A lot of people in the industry are concerned about low inventory, but so far so good. And the inventory will start to be built up. And one of the energy write-ups this morning, LNG traffic through the Straits is now kind of at normal levels. So, and oil tankers are building up as well. If you turn to Exhibit B, the price of WTI got down to 75 last Thursday. The 27 price was 70. That WTI price now is 71 or so. I suspect a buck or two will come off the 27 price. In an odd kind of way, the lower oil prices result in somewhat higher gas pricing. I think the logic there is that at WTI price in the 70s, there's not going to be as much development in the Permian, and the Permian is where most of the gas growth comes from, associated gas. So this will probably help gas a little bit. U.S. government revenues and expenses, we need to have a solution here for spending. I think the solution will be support for reforming our healthcare. I don't know exactly what the reform's going to take, but as a quick inspection of these numbers show, if you need to save a lot of money to try to get our deficit on a downward trajectory, really the only place to go is healthcare. Interest, you can't help. Defense is, if anything, going to go up some. And then all other just isn't large enough to matter. So it's going to have to be healthcare. I have no idea about the timing, but I think some point in the next 12, 18, 24 months, I would say before the Trump term is over, is a better than 50% probability there's going to be a problem in our Treasury market, similar to what we had in '08, where the capital markets just stopped while all that mortgage debt was dealt with. Here it'll be different, but I think the result will be the same. It'll be an opportunity to have a bipartisan support for some type of solution. So now that's an optimistic view, I think. I'm not sure that Mike or Jason have too much sympathy for that, but since I'm more and more convinced that something needs to happen, I think I'll probably sound like a broken record for the next several Wednesdays, because I do think that is something we all have to consider about in terms of making new investments or holding on to investments we own. The immediate impact will be pretty disruptive, but I think the impact on the capital markets will be positive when it's dealt with. So I wouldn't worry about it. If you have an investment or a position you want to expand or start or whatnot, I might give it some time or buy a half position or a quarter position. As far as healthcare goes, think everything in healthcare may be stressed. So if you've got a healthcare position you really believe in, I'd stick with it. If you're looking for new investments to make, other things being equal, I think I'd look away from healthcare. And with that, I think I've only used 5 minutes. Over to Mike and Jason. Any commentary on those remarks?
I think there's areas in healthcare that are very investable, but as you said, something has to happen at the pace of growth of healthcare expense in the US. It's going to be the entire economy eventually. So we have to do something. Hopefully something is done sooner than later.
So we did our kind of deep dive on the healthcare system a few weeks back, and we talked about Wyoming, where you had a unique situation where someone who cared went in and figured out how to fix the situation, and they saved a lot of cost. And my only fear with a Medicare for all system is that you might get it set up and working for a little while, and then through lobbying and some of the normal means at which these things come undone, the same thing will happen that happened in Wyoming. That said, I don't think it's not a reason to try this anyways, because if it's in public finances, it will be easier to audit. And you see some of the investigations and criminal charges that are being floated right now within the healthcare system. I think as long as they can force some transparency in some of the spending, there will be a better outcome than what we have today.
And we've had some encouraging conversations with several people recently about that we should actually perform healthcare in the US. And that is to say, keep people healthy rather than triaging illness and what everyone's calling sick care. So if there's anyone in a position to look at doing that, it's RFK Jr. most likely. He's been willing to take that stance in other parts of the FDA's purview.
I think Dr. Oz too, if not more so. The institution, right? Mm-hmm. The federal government actually would be much better off if people were healthier and paying taxes longer.
Absolutely.
So unfortunately for a health insurer or a health premium collector, as you might call the healthcare companies, their timeline is 1 year. They underwrite a patient. So it's just raise prices in the next year in order to make sure that you cover what your expected cost will be. That's not really worrying about the long-term health and care of the patient. So,
well, the government runs Medicare, and everyone eventually becomes eligible for Medicare.
Right.
So it's in the government's best interest to.
Mm-hmm. Yeah. So roll it in earlier than later. I like it.
I think our subject for a good 10-minute stretch here is proprietary data. And I think that we spoke last Wednesday when the new Anthropic model said that your prompts were going to be recovered and saved. People became alarmed. So the history here is that information on the internet is free to use. So the question is, will the frontier models try to accumulate information that goes beyond what's on the internet? And if so, if you're talking about healthcare, if you're a large pharmaceutical company, if you're a Lilly, how much proprietary information do you want to sit on? Or if you're still or millennial and you have trading strategies, or if you're a startup with some type of proprietary product or some new software, how do you protect your information from being available to the frontier models? Because one of the things we see, whether it's the Claude app or OpenAI or Gemini, these models or agents running the models can do an enormous amount of analysis in a short period of time. So anything that's out there can be utilized in a way that wasn't feasible before we had these models. Now, does that mean that AWS or Microsoft or Google provides server capacity and absolutely commits that it's totally proprietary? Does that mean that the user, I mean, for example, Jason, Mike, and I were talking to one of our morning talks, and we think that one of the large users of AWS is U.S. government intelligence agencies. If AWS can keep the intelligence agencies comfortable, why can't they keep the rest of us comfortable so that you would still use the cloud companies rather than your own servers? But now, what I've just outlined is kind of inarticulate as compared to what Mike and Jason can cover. So the rest of our allocated 10 minutes is with them. I just tried to introduce the subject. So over to you guys.
Okay. I think I want to start with the best example being the most privacy conscious company, Apple. And we didn't talk about this yet, so this is probably overdue. They are going to be running Apple Intelligence inside of Google Cloud, but not on TPUs. They will be doing inference on Nvidia Blackwells. And the reason that they're doing that is Nvidia is the only company that's able to offer encrypted data in memory. And so how does that trickle down? I mean, Apple is notoriously privacy conscious. Like you said, for certain industries, certain products, you could definitely see where anything other than that level of security would be unacceptable.
That's interesting. And this gets very technical, but one of the best ways to exploit cloud computing is by gaining access to the memory on a server. By definition, most cloud servers are shared. And if you get access to the memory, you can maybe see what the other customers co-located on the server have put there. And the most telling is you find passwords somewhere in the memory and you can pull those out and then hack that company.
Yeah.
Interesting.
So that's your leading indicator right there. Now, the other situation is if you just run all your stuff in your own data set and it's all of your data in there, you don't really have to worry about somebody else co-located. So two different approaches, both sort of solve the same thing, with the Nvidia one being maybe a little safer.
Yeah, the cloud computing providers really have an excellent track record for protecting customer data. There hasn't been very many, I don't think at all, on AWS or Google's cloud, any leaks of customer data due to the fault of Google or Amazon.
Yeah, it happens plenty of times due to the fault of the client.
Correct. Yeah. Misconfiguring security settings, and that happens. So they have an excellent track record, better than most companies, maybe better than all private companies. Yeah. And as far as it comes to AI, I've read through the privacy policies, and it's pretty bifurcated between, if you're an enterprise customer, you have full data protections in the policy, except in the case of this most recent Fable 5 Anthropic model. But if you're on a consumer grade plan, even the paid plans, they're going to take access to your data to train their algorithms. So if you're really concerned, even if you're using it as an individual, sign up for an enterprise plan.
But know that enterprise plans are far more expensive.
Yeah.
And even the Claude Max plans that we run you can adjust how much you share with them, but there are ways, and in terms of service, that they get access to more than you would think they do. So it's a problem. I mean, it's a problem. It's a reality, regardless how you cut it.
So setting up your own server, if I'm taking an energy company with the industry I know the best, if you're Exxon, setting up your own server facilities rather than using AWS. I mean, if it's good for the U.S. intelligence agencies, why wouldn't it work for Exxon?
Yeah. I think the intelligence agencies have a special level of customer support, but you're right. In general, you're safer in an AWS cloud because they have a whole staff of security engineers constantly looking at their equipment and all the software upgrades that happen. And if you're running it yourself, every time you upgrade, a version of whatever software you're running out there, you're probably not doing a full security audit on your cloud servers. So really, you're probably opening yourself up to a vulnerability more by running your own software, running your own data center. That is.
How does this extend to agents?
I don't know. Yeah, it's maybe too early to tell because they access, they're going out and grabbing access from all over the internet.
I think that's it's a new surface area, right? And the challenge is that agents operate through channels that access the open internet, one way or another. They will almost always touch the open internet.
And maybe the danger isn't that they are doing that and it leaves your hardware vulnerable, but they could go out and access a compromised service somewhere else. And you don't know that they're doing that.
Right. As simple as, we're gonna build this thing internally and we're gonna grab the latest version of this open source software and install it on the machine.
Mm-hmm.
And somehow or another, that open source software had infected that.
Right.
Which we are seeing a lot more of now.
Yeah. Hopefully the flip side is these agents, at a service like GitHub, autonomously go out and detect this stuff and make sure no one's checking in viruses to their code there.
I mean, it's been, there's best practices, like you never want to be on the latest version or automatically update to the latest version of this stuff. You want to wait until there's been time for people to recognize there's problems. But the real vulnerabilities, and then you have even an agent reading a web page may get, we talked about Babel last week and Mythos and how Amazon jailbroke it. Similarly, if the right set of instructions are given to an agent that goes through an LLM, it could cause it to do things that you wouldn't intend for it to do, like give up security keys or tokens or whatnot.
Mm-hmm. But that's been something that hopefully has been on the AI labs minds for years now, and they have ways to mitigate it.
So if we go to the first few pages of the memo, after this discussion, which seems pretty organized and kind of definitive, if I believe that there are two really strong entities here without, with less risks than the others, one being Nvidia on page 3 and the other being Google or Alphabet on page 1. If you can't imagine this stuff happening without cloud capability, in effect, using your servers rather than someone else's servers, and you're trying to make an investment for 5 or 10 years, and you had to pick between Nvidia, which makes the equipment, or Google, who seems, about the best positioned at not only supporting their search business or trying to make their search business not go obsolete, but also storing data and, with their own frontier model. How do you pick between Alphabet and Nvidia? You had to own one of them for the next 5 years.
Alphabet would be a bet that the search business continues to grow in a way that the economics continue to flow to Alphabet. It also is a bet that the return on the capital they're spending on their CapEx is going to be substantially high.
If their return's not high, none of the others will be high, and then Nvidia is impacted.
Yeah, it's almost like Amazon's the chicken bet, right? We talked about, Charter and Comcast, and how Comcast is the chicken bet because it comes with content and also the wires in the ground. Alphabet's kind of the chicken bet because you have the application layer in Google search. you have the hyperscaler in Google Cloud. You've got the model layer in Gemini, which isn't really a great business yet, but has a maybe the application layer could be.
DeepMind.
You have DeepMind, you have all the stats.
Yeah.
But remember, the cash flow is very dependent on search. In Nvidia, you have, the leading hardware provider in this space. There are certainly risks associated with it, but it's good to be the guys or gals selling equipment, selling the picks and shovels in the gold rush. Hard to pick a better position to be than Nvidia. And with the level of cash flow that they're generating, their options for expanding into new business areas are practically limitless. So they're very different.
Yeah. Nvidia, in an odd kind of way, looks, if you're into relative value, Nvidia looks like a lower relative value than Google, because Nvidia doesn't have all that CapEx, and it's just generating huge amounts of free cash flow. I mean, I have it down at 160, and I think as each quarter goes by this year, that number is going to wind up around 200, which is extraordinary, because the only other entity that generates that amount of free cash flow is Apple. And Apple's currently 120, and certainly Apple's free cash flow will go up, but I don't think it's at, no one's predicting 200 million anytime soon. And Alphabet or Google has a very large capital program, so that its free cash flow will be pretty marginal.
Well, it'll be interesting to see how Apple handles the memory pinch we're in, memory supply shortage. They've announced that they're going to raise prices on their devices, as they would have to. That one person estimated that the iPhone Pro model will probably have to go up by $275 just to break even, just to keep maintaining the same gross margin level.
Holy smoke.
Yeah.
Wow. It's a pretty big price increase.
And I think Micron reports earnings tonight.
Today, I believe.
Today, yeah. So
it's such a pinch point in the industry. I can't help but think that all of the software teams are dedicating a good percentage of resources towards figuring out a better memory management solution for these models.
for sure.
Yeah.
I mean, well, but also you look at the performance, again, back to one of the advantages of NVIDIA is that the evolution of the efficiency of running a model on the hardware improves over time. It's like a factor of 2.5x on the most recent OpenAI models. So, and that's just since introduction of 5.5. So you have, the tools are there, and once you get them out there, you figure out how people use them. But then we're even hearing companies trying to figure out ways to make data centers more efficient, et cetera. So there is so much incentive to make this whole stack more efficient.
Mm-hmm.
There's plenty of money there to be spent.
Jason, before we run out of time, we did talk about healthcare earlier, and I maybe was a little too conservative in terms of how healthcare as an investment will result from kind of redoing our healthcare system and make it less expensive. I mean, for sure, there'll be winners as well as losers there. But what about healthcare news this week? Just to make sure that we give healthcare its due in these podcasts.
Yeah. Well, you're not wrong in that whatever we do is going to be disruptive, but hopefully we come out with a better solution on the other side. As far as scientific news, an interesting study on the use of CRISPR. So this is the gene editing technology. They're showing how it can be used to kill cancerous tumor cells. Part of the mechanism is it goes and finds a segment of DNA, it cuts it, and splices in new genetic coding. So rather than splicing anything in, it finds cancerous mutations and cuts it and then leaves the cell with essentially shredded up DNA so that the tumor cells die and the tumor overall shrinks. And they've seen success in that. The caveat is this is a long, long ways from clinical use. You could see there's a big safety challenge if it goes off target and affects healthy cells. And then there's still a question of how to deliver it to the right cells in the body.
But the interesting thing is that it generalizes.
Yes, it generalizes.
And I don't know of any cancer treatments that are really
That effective, that generalized, yeah. Surgery. Cut it out. And then another interesting thing is an announcement out of the FDA, a program they've been working on for quite some time, is that with the idea of shaving off 6 to 12 months from phase 1 clinical trial timelines. The idea being is they want biotechs to partner with academic research centers to launch studies faster, cheaper, more efficiently. And really it's twofold. It's to juice our early stage research biotechs, but really the incentive is to stave off China and the Chinese biotechs that are operating under a less stringent regulatory framework, and they're able to move faster. And we're seeing so much development come out of China first before the US now. So it's a risk to our position as being the hub of the world for biotech. So kind of encouraging there.
Good. How's the thinking on, we mentioned JFK Jr. Does he make it through to the midterms or make it through to the end of the Trump administration, or does he become just too much controversy for whatever side of the political spectrum you're on?
The lobbyists are pretty clearly out to get him.
Yeah.
So whether he survives or not, I don't know.
Yeah, I don't have a strong view either.
But I am coming around to your view, Hunt, that Dr. Oz is actually the more important one.
Yeah. Instituting something like Medicare for all. And let's be clear, let's go to Exhibit C. To backtrack a little here. The U.S. government sends $600 billion a year out to states to finance roughly half of the Medicaid system. Obamacare is built around it, kind of extension of the Medicaid system. Medicare is for 60 and up. Medicare for all would mean there wouldn't be a Medicaid system anymore. Presumably, rather than try to rely on disparate states like, left-leaning states like California or right-leaning states like Texas, one of the things Mahmoud Oz could do is simply say, look, I'm going to negotiate with each state, but from this point forward, I'm not sending out any Medicaid funding because the people who are recipients of Medicaid funding will be able to access the Medicare system. Now, for people with employee insurance or, their own insurance or people who choose to self-insure, all that would be permitted. But what we would be doing is we would be having every person from birth on, if you go to an emergency room, you'd be taken in under the Medicare system. And that would put the head of Medicare system, we just had the death of Alan Greenspan, who was, a central banker for the Fed for, 14 years or something. What we need is someone like Mahmoud Oz to be the first head of the Medicare system, and you'd have to insulate him from any political influence, more or less the way the Fed is insulated. But in effect, the Medicare system would negotiate rates with all healthcare providers. And we as individuals, all 320 million of us, could continue in an employer plan or with something else we dreamed up ourselves, or just acquiring healthcare over and above what the Medicare system would provide. Very kind of an appealing prospect. And I think one of the things we ought to do, maybe not next Wednesday, but some Wednesday, is try to identify amongst healthcare companies who would benefit from that. And because I think there will be winners, and other things being equal, why not? If there is the possibility of something like this happening to try to deal with their deficit, why not own the winners? Any further comment there, Mike or Jason, before we close?
No, I like that. I think it'd be a fun episode.
Yeah, it's
I know.
it's an appealing idea, relying on Medicare to be well run.
Yeah, I'm really in favor of expanding the scope of government, but in this case, there's a lot of perverse incentives involved, and government's the only one that has the big picture view. It's actually more similar to defense.
And the scale is already large.
And the scale is
Right.
gigantic, larger than defense.
Well, the government's
Yeah.
Medicare and Medicaid.
Yeah.
All right. Good. Well, that may be our 10-minute episode next week, where assuming something like this might happen to deal with, an oversupply of government bonds. Because remember, the incoming chairman of the Fed wants to take the balance sheet from wherever it is, $7 trillion down to $1.5 trillion or so. So you'd have another $0.5 trillion, $0.75 trillion of government paper that would have to be issued rather than the Fed buying it to replace its rundown of interest and principal, the Fed just wouldn't be there. And then you got $1.5 trillion or whatnot of, $2.5 trillion of government bonds to buy, whether it be short to, which is probably what the U.S. Treasury would do. It's still a heck of a lot of financing to do. And against that, and we'll cover this next week too, you have a huge amount of financing being done to build these data centers that we were talking about, or cloud, add to cloud capacity. And so, it's not unusual. Huge amounts. SpaceX, having raised all that equity money, then went right out and did $25 billion of public debt. So this is something that we don't want to predict or spook people out of positions they hold, because that never works. If you're in positions, they should be strong enough so you skate through something like this. But something like this, I think, is a little more likely than less likely. And as more months go by, the probability of it kind of increases. And with that, we'll be here at exactly 7 days from now. And in the meantime, everyone, be well and stay healthy. And thanks very much for listening. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.